Good afternoon, everyone. We're here to talk about Robinhood and its restrictive free trade. I'm here with Joel, myself, Trent, Shivang, Troy, and Joe. We're talking about the executive summary. We're going to basically what happened in the early months of 2021 in January. Robinhood restricts trade on trading stocks such as GameStop and various others. Robinhood this allowed them to be targeted for market manipulation. Retail investors lost millions of dollars, and this raised concern regarding hedge funds and the government, such as the SEC. Moving on to the preview, we just cleaned up and finished the executive summary. We're going to talk about, myself was going to do the preview. Joel's going to handle the company background and position. 3 critics will also be handled by Joe. Company analysis will be taken care of by Troy, and Shivang will follow up with the critics analysis. Finally, we'll have the analogy handed by Joe, and recommendations will be considered myself. Again, I'll clean it up with that. Here's Joel with the company background and position.
Hi, my name is Joel, and I'll be going over the company background and the position as well. Robinhood was founded in 2013 by Baltimore Teneb and Baiji Bat. Robinhood is a financial service company whose mission is to democratize finance for all by offering commission-free trading on individual companies, options, and ETFs. The company's revenue comes from 3 main sources: interest earned on customers' cash balances, selling order information to high-frequency traders, and margin lending. As of 2020, Robinhood had 13 million users. Next, I'll move on to the position. On the morning of January 28, 2021, Robinhood decided to freeze trades for GameStop. Shares saw an increased price after Reddit traders started buying the stock at an alarming rate. This then led retail traders and politicians to question the freeze because it was something that seemed very unfair to the users. Robinhood then stated that the freeze was due to high market volatility and would only allow customers to sell shares. Later, Robinhood explained that they need to keep hefty sums of cash to be able to process all the trades. Basically, Robinhood did not have the capital to keep up with the demand, so they had to borrow hedge funds. This is a controversy that has caused a loss of trust among Robinhood users that is continuous as a result of the freeze. Next slide, please. Now we move on to the 3 critics. The first one is retail investors. Basically, a subreddit group and retail investors came together to make money and fight hedge funds. And for hedge funds, basically there was a lot of shortage, meaning billions of dollars were lost due to the freeze. And for government, the CEC put out a statement regarding the issue, and the politicians decided to voice their opinions out. Now I'll pass it on to Troy to go over the company analysis.
For the company analysis, Robinhood profits off of selling user information to hedge funds. And the app itself, Robinhood, is popular amongst millennials as well as first-time investors because of its low barrier of entry, which is less amount of funds that you have to put in to start your own portfolio, and the user base being very easy to access. I'm going to pass it to Shivang for the analysis of the critics.
Thank you. So for the analysis of the critics, the first ones we have are the retail investors. Retail investors are pretty much people like me and you, working class people who wanted to be able to buy stock. There's a Reddit subgroup called Wall Street Bets, and they pretty much came together and they wanted to make money. They liked the stock of GameStop, and they did not like the fact that hedge funds wanted the stock to not go up. So they came together and they wanted to, make the profits. This was shut down obviously by Robinhood because they ended up imposing trade restrictions on February 28th, which caused a mass sellout and the price of the stock tanked. Hedge funds, they have been shorting the GameStop stock for years. When you short a stock, you're pretty much betting the stock is going to go down. The only way hedge funds could make money is if GameStop's price kept on going down by every single dollar. They were furious at the sudden rise in price. And every day they were losing $15 to $20 million just because the price of GameStop kept going up. This is when pretty much the government had stepped in, and the SEC pretty much put out a statement stating that they're monitoring the extreme volatility on stocks like GameStop, and they did not specifically say which brokerage firms they are monitoring, but it was implied they were looking at Robinhood because Robinhood did kind of set off a chain reaction as far as they were the first ones to impose restrictions. There was a House committee hearing with 50 House members and the CEO of Robinhood. And during the House committee hearing, he was constantly asked, why is it that they decided to impose restrictions? And the only answer he could really come up with was that they had clearinghouse issues. And a clearinghouse is pretty much an institution that backs up brokerage firms. They're the ones that provide the capital. And so he was pretty much pointing fingers saying it wasn't them, it was the clearinghouse and blah, blah, blah. And AOC and Anthony Gonzalez did not like that answer because they stated that maybe Robinhood had failed to manage their own capital risk, which is why they were having clearinghouse issues. And they felt that this did not create a free market for everybody, and it only benefited the hedge funds because the only people that stood to lose billions of dollars was the hedge funds. And the only people that stood to make money on this were people like me and you, the retail investors. And next, I'll be going over the graph or our graphic. As you can see, on January 26th, the stock price was trading at $148. And on the 27th, it was at 348. It peaked a little over 440. But as you can see on January 28th, that's when Robinhood decided to impose restrictions. And when it was pretty much you did not have an option to buy a stock, you could only sell the stock. So when you have a bunch of new people trading and all they see is a sell button and not a buy button, they freaked out, they sold, and when you have a mass sell-off, the price of a stock tanks. And as you can see, that's exactly what happened. And next, I'll be giving it to Joe to talk about the analogy.
Hello, everyone. Today, I'd like to compare Robinhood with the popular brokerage firm Fidelity. While both are brokerage firms, the way they handled the GameStop situation could not have been more different. When Robinhood decided to restrict trade on GameStop, it had users very upset. Fidelity, on the other hand, did not restrict any trading whatsoever. Fidelity only issued a warning to their customers, letting them know that GameStop and other popular stocks were extremely volatile, meaning that they had the potential to lose lots of money. They did allow their customers to do what they wanted and respected the free market. Part of the reason this happened is because Robinhood claims they did not meet clearinghouse funding demands. And part of the reason for this is because Robinhood actually only has 20 billion in assets under management. And I say only 20 billion because Fidelity, on the other hand, handles 8.3 trillion in assets. Fidelity was founded in 1946, whereas Robinhood was only founded in 2013. So it's pretty obvious that Fidelity has a lot more experience handling market volatility and unprecedented situations. I'd like to hand it over to Trent to discuss recommendations for Robinhood.
So in conclusion, some recommendations we'd like to start with for Robinhood to follow. We'd like for them to be more transparent with their customers and also other hedge funds and brokerages, especially the government that manages the market. They can do this by accepting the responsibility. Robinhood lost the trust of millions of its customers. Retail and in return, retail investors lost millions of dollars. They can accept responsibility by damage control, ensuring that this will never happen again, and build on their public relations. So ensuring that their customers feel confident with using their programming and using their trading platform. Following these recommendations, Robinhood will see an increase in positive reviews from customers, a larger customer base, as well as ensuring that something like this doesn't happen again and restricting a free trade, and it restricts a basic human right that we have in this country. That concludes our presentation. Thank you for listening. If you have any questions, comments, or concerns, we will be more than happy to help you out with that and answer any questions. Thank you once again.